Good morning, everyone. It is Friday, May 28th. We are getting into the Memorial Day weekend. And this is Nadex Morning Analysis. My name is Todd Rich with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. We're going to take a look at what's going on in the market, some potential hotspots that you can look at for today, and maybe even something that you might want to keep an eye on. Nadex will be open on Monday for certain products. So in light of that, I think we're going to definitely be taking a look at some FX today, some foreign exchange. But before Brian and I jump into it, I do need to share this disclaimer that trading on Nadex involves risk and may not be appropriate for anyone or everyone. I'm sorry, may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we seeing today? I'm just going to do this real quickly because I want you to see all of these. It's kind of there we go. There is dollar strength across the board, and we're just as you can see in every one of these charts overnight, the dollar has been making a very strong move. When you look at it with the pound, or look at this against the euro or the Aussie, because the dollar is in the second position. These charts are straight down. You take a look at the loonie, the Canadian dollar, or the Swissy, the Swiss franc, the charts are straight up. So dollar seeing strength across the board. We are going to talk about these, and then we're also going to talk about gold. Gold making a very volatile move this morning. Just before and then right after, there was the core PCE price index, which is the personal consumption expenditure index. So how is inflation looking for the consumer, individuals, and that caused some pretty significant volatility in the gold market. And then based upon time, we might see what else we could take a look at. But Brian, I'm going to flip it over to you, and let's talk about the dollar first, then we'll get into gold, and then we'll see what else we have time for.
Yeah, so a lot of data, and we mentioned it yesterday, the UK talking and mentioning basically the raising, it's time and it would be appropriate to start raising interest rates. There's a number of stories out this morning that kind of highlight it and talk about it, talking about how the pound gains and boosts, but dollar inflation, like we hear it everywhere. There's an article that just came out about the Fed is likely to taper, don't expect a tantrum. They're talking about tapering, and then they still think that they're going to see, and again, this is an opinion article from Bernstein, saying late 2022, 2023, but unfortunately, while that's what everybody expects, again, we have news that came in just a little while ago that, again, it's showing that we are having prices accelerate faster than what was expected, even though the forecast was higher than what it was previously. And again, for those of you that don't know, core CPE is basically what you and I, as consumers, are paying for goods and services. It does exclude food and energy. And remember, supposedly, I guess not supposedly, but what the Fed is telling us is, so far, all the inflation has been rooted in energy and oil, which we definitely know. If you guys don't know what I mean, look at all the memes out there for what oil or gasoline prices were last year versus right now. It's like almost double in some places. And then also look at food costs, and production costs. But this is minus those two numbers, right? You can see excluding food and energy, and the difference between CPI and this, because I got that question. Todd actually asked it a little while ago about, wait, isn't the CPI? It's individuals, not just on a whole. So it's you and I at home, what we're paying. Because again, that's inflation for me is not kind of what the overall, producer pays. It's what am I paying, right? That's what I care about. And that's exactly what this core PCE price index is. Not only was it higher, or not only was it forecast to be higher than previous, it was 0.7. So it was even another percentage point higher than what they expected. So they can say they're not going to raise. And again, remember, they keep saying, oh, we're going to see this, but it's transient. Well, what happens if it's not? That's the big problem. And again, we could have runaway inflation. And again, everything that we've seen has shown it. Other countries are now talking about it. Other countries are tapering, and the United States is once again lagging behind. So it's one of those things. To be the financial leader, you need to be taking proactive steps, not reacting and being the last. And eventually, it's going to start costing the United States dearly, because we're always in the reactionary mode versus trying to get ahead of things. And again, it's nice that they want to wait till 2022, 2023, but that would be another year and a half of absolutely zero, interest rates basically out there, super cheap lending, a market that's already high. Like, how much inflation do you want to breed before it's too late? So it's one of those things. Without other countries mentioning it, it sent the dollar on a tear. I mean, here's the dollar index. You guys can see that. I mean, really from the European trader on. And again, you may say, well, how did it move at 4 o'clock in the morning? Banks are closed. No, it's a global phenomenon, right? UK traders knew what was coming. They could see it. They had areas of buyers, and they just sent it higher. Now it's the US traders' turn to react, okay? And remember, having an expensive currency isn't always what's best. People think, oh, no, it's great if the dollar's, really. No, it's not. Because that means for other countries to buy things from us, it's more expensive. So
makes it harder with export stuff, right?
Yes. So what happens typically is the balancing of scales is when your economy and your country is not doing well, your currency is devalued. Okay. It makes it cheap for other people to buy from you, which stimulates your exports, which raises your profits, and it brings everything up. It's why there's such a battle with China being a currency manipulator, because they are not a free-floating market. They peg where it is. So they have it substantially lower than where it should be based off the size of their economy. They're still claiming third world nation type status, but I mean, we know how big their economy is. We know how much control it is. They're just not there. I mean, Japan is a perfect example. Japan's is extremely low interest rates because, again, they are purely an export nation. They have to keep their currency low or their economy dies, right? China's trying to do the same thing, but yet is such a big force. They're as big as the United States, as far as what they do, right, on an international spectrum, and they keep it low. So dollar index is high. Now, here's the kind of the word of warning with this. This is a lot of movement very, very fast. I mean, I'll just take, I don't know, we can do, I guess the euro.
Dollar.
The euro dollar.
Look, the euro's got is probably
it doesn't matter which one.
The pound too.
Yeah, I mean, so from 4 o'clock this morning, you're talking about a move of about 60 pips, about 62 pips to the downside. Right now, and again, if we take this back on a daily basis real quick, you can see the daily ATR. Again, the daily ATR is the average true range. I'm only looking for this top little thing. I don't need to really see the rest of it, right? On average, it moves 66 pips. Drop it back down. We can see that this move since the open this morning, where's my measuring tool? Since about 4:30 this morning has been 64 pips. Okay. So when you have an entire day's worth of movement inside of one trading session, a lot of the oomph is already gone. Okay. The way that the human brain works, and again, the markets are not stupid. The market knows this. After a big drop in price, you just saw phenomenal data that says, oh, the dollar's going up. There's going to be profit taking here. Okay. And you're going to have all the retail traders that just saw that news. They're going to try to react to it after the fact. So it kind of makes it a little bit dangerous. And again, what you should be looking for, and I don't actually have it up on this chart. Actually, I know we have some levels sitting down in here, but we have levels just a little bit below kind of where we're at right now that have actually been tested. And you can see coming into this right here, and again, it shouldn't be purple. That's I was doing something with some call spreads. We have a level that we're getting ready to run into. And again, it halted price, had a nice push off, was tested once and tested again off a big drop. And that was an 8 o'clock entry and a 3 o'clock entry. So a 3 o'clock test and a U.S. market open test. So we know that they're legitimate buyers. It's not like a 11 p.m. at night kind of zone test.
Right.
It's been hit twice, so it is number 3. But again, there will be profit taking when people are sitting there shorting this in the overnight, as well as think of it this way. It is a holiday weekend, right? So a lot of people who are not trading today or out at 12, right? And the UK only has 4 more hours to go. So our UK traders that have been shorting this entire thing down, are they going to want to hold this position over the weekend and put all this profit at risk? No, of course not. They're going to start looking to buy these things back, which again could give us a little bit of a reversal and kind of a retracement. Because again, at the end of the day, yeah, the inflation is there, but they're not changing any policy. Nothing's already gone there, so there's not really a ton that we can do at this point in regards to kind of dealing with it. So if anything, I would look for maybe a little bit of a bounce. Again, I expect it'll go down and it'll test this level and maybe base through it a little bit as, again, the retail trader steps in and say, hey, this is great for the dollar. This is wonderful. And again, on the flip side of things, remember, anytime you raise interest rates, what happens on the other side of the coin, right? That's where we start going over the indices, and you can see that, over the last 2 hours, you can see that although the NQ was up in the morning versus yesterday, you can see that for the last 2 hours since 7 o'clock down, it's starting to push to the downside. Remember, inflation means raised interest rates, which means the indices go down because lending becomes harder and it becomes a harsher environment. So it's a big play. We'll see how much the dollar can hold. And again, you'd love to have a weekend that goes out on the green, but with seeing inflationary pressures there, seeing the news grasp at it, man, there's more inflation than expected, and seeing headlines out there, the result for inflation is interest rates. So, I would say it's a very interesting play today.
On the currencies, I was wondering, I'm just going to bring this over here just to see, which ones have made the largest moves. Clearly the euro US dollar, down 0.5%. But we're also seeing the dollar Swiss up a little bit more than that, but roughly the same move. And I'm not even sure the dollar Swiss has an ATR that's anywhere near that. So I'm just kind of wondering if what we're seeing in the dollar Swiss, and then we might even take a look at the Aussie dollar, which is down almost. It's coming down on almost a whole percent. That is crazy, and that would actually drive into us talking a little bit potentially about gold. So I don't know if you want to.
And I would say too. Remember, every country has their own scenario. We know that Australia is locking down right now for 7 days.
Yeah,
that is obviously weight. So again, this goes back to understanding what's in the market, right? We knew Australia was already weak, right? So we knew with Australia being weak, and again, this is why it's important. You don't have to be a currencies trader, but to find the number one opportunity, you have to know. And again, this is why, flip it back real quick.
Okay.
This is why,
by the way, just so everyone knows, I'm looking at the Aussie dollar up here and the Swiss, the US Swiss. You can see how dramatic these moves have been as well. These three on the right are the ones where it's really going nuts.
Yeah, I was trying to find the other news. Yeah, right here. So this is why I like this up top, because I can get a view of who's strong, who's weak. Right now, I can tell you right now, the pound dollar may be straight down, but does that mean it's a weak pound? The answer is no. The pound yen is up 102. Why is that up so big? Again, we know that Japan is continuing. With the news this morning is Japan is extending their lockdown because they're having absolutely major problems. So we know the Japan currency is a weak currency. We know that Australia, yesterday we found it at the bottom, Australia is locking down for 7 days. So if we're thinking about for news a dollar strong situation, which again, rising inflation is a dollar strong situation, do you want to go against something like the pound dollar that is also strong? The answer is no. You don't want to do a strong versus a strong. You want to do a strong versus a weak. So pre-news today, you should have been looking at the dollar, the Aussie dollar over here, or the dollar yen. Here's the dollar yen chart, guys. Here's a zone that we liked up top, but after that big push, what did it do? It Harry Pottered on us, right? It blew through a prior zone of sellers, right? And it did this. It came up, it came right back down, it tested that level, and look, even this morning, had you gotten long yesterday, and again, this is after the contracts printed, we didn't know what it was going to be today, but we know Japan was having issues. They were locking down. We knew that we had a strong dollar play situation. And again, it's a decent run up. From that level, we're talking about 45 pips. And this has really mostly happened in the morning today. So
yeah,
the goal is figure out what it is. And again, it's not a gut feeling. We know that it's better than expected. We know that inflation has been there. Go against a weak currency in those situations. So, and you mentioned gold. So we'll go.
Yeah, let's definitely take a look at gold. I think we should take a peek at gold.
Yeah, and again, these are levels. We were looking at a big push, and we were waiting for a UK open down here at 1880. We knew that we had buyers stepping in the past. And you look at this, and let me drop this down just so everybody understands exactly what happened here. Okay, you can see that the news time frame was right here. Okay, it was the actual third can here. I'll drop it a little bit lower.
The green one.
Yeah, this one right here. If you guys can see the big green one, let me look in yours so I can see it. It was here. And you may say, wait, why did it drop like this suddenly? Well, think about it. Okay, the overall market expected this number to be more positive. Okay, I'm not going to say that somebody left the report on their desk and they knew the data ahead of time, but at the end of the day, did you really need to have the data before anybody else, right? You knew that, again, it was already expected to be better than expected. The media would say, hey, listen, it was 0.4 before, now it's 0.6. That's inflation. That's good for gold, right? So what happened is, if you want to buy something, do you wait till it gets to an all-time high to buy it? No, you push the price down. So what happened is, at about 8 o'clock this morning, knowing that we were 30 minutes before the news release, they drove the price right down at 8:10. Right? And then what did we see? We saw a level of basing. And then what happened when the news came out? The news drove right back down in that same zone. Right at 8:30, this is what it did. It opened right at that level, and then it exploded higher. And now you're getting the profit taking from that level, right?
Yep.
So I would say that gold is one of those things. Today, again, it went down into a buying level. It should have turned it here. This is the catalyst that we talk about. I'll remove this so you guys can see it. But you can see we came down deep into the level. So we expected it. And look, guys, we were talking about opening here and closing here. Well, look what it did. It went down, it hit it, and it went up to the top and hit it.
So, yeah.
I mean, there's your buyers and sellers. So there's not a whole lot more we can do with it.
I just wanted to, because I want to drop this on. I mean, just because we're watching it happen. I mean, it's kind of comical. And this is on a 15-minute. Let's do this. I'm trying to get this right in here. This is this red bar is the pre-report sell-off. This green bar, the report comes out. It completely comes back, and now we're watching profit taking. It's like we're watching it in real time as it plays out. That was a bit of a crazy morning for gold, and who knows what's in store for the rest of the day.
Yeah, I mean, that's news trading, guys. That's why I keep telling you guys, I absolutely love news trading for this reason. Again, catalyst back and forth. Last thing, and then we got to get rolling for the day because I want to get out there and trade. We mentioned natural gas yesterday. Right, you guys remember when I said, "Hey, if you guys like what happened on, for oil on Wednesday, that go out there on Thursday that we have natural gas is the same type of setup." Here's the setup right here at 10:30. There's news. Well, there are different ways we can play things, right? We do session open, we do news, or we do retracement. Well, we already knew that we had a level. We knew we had a big gap on the 30-minute. We knew that we had this big push up, went all the way back up top. Well, guess what? There just happened to be a call spread here, right around $3. Here's a 2-hour call spread, short duration, so that the contracts are not as far. We knew the initiation of the gap came down here. Let me adjust it. We knew that we had a gap, so we knew we had a target level right down here, approximately around 2.94. Well, there was your move really, you went all the way down to the profit target in less than 5 minutes. So same strategy we do for oil, you can absolutely do inside of natural gas. And again, same thing we just talked about. Look what price did right before the news. Price drove up because, again, if you want to sell something, you want to sell it for more than, you don't want to sell at the bottom. You want to sell at the top, right? Buy low, sell high. We sell first. We want to do it here as it popped up, took it a little bit out of the money, made it a cheaper entry. News came out, right down to your profit target, you're out. Even if you let it expire, it expired at its low for the move. So same strategies, different assets. It's all the same. So
all right.
That's it. Have a good Memorial Day weekend.
So I did want to point out one. If you're on the platform, you will be able to see that we are opening Sunday evening at 6 p.m. our normal time, and as well as on Monday we will open our normal time. It's just that Monday we're going to close early. We're going to close at 10 a.m. Eastern, and we're going to have a limited offering. It's going to be the foreign exchange that's going to be open. And the reason that we do that, if anyone's kind of curious, the equities markets are closed, the commodities markets are closed, but foreign exchange never closes. And we do recognize and we do appreciate that not all of the customers at Nadex are here in the States. And when it comes to Memorial Day, it's not a global holiday, and there are a lot of people who still want access to the markets when they're open. So we are offering those FX markets for a very limited time on Monday. Just wanted you to be aware of that. With that, if you got any questions for Nadex, please email us, customerservice@nadex.com. Got any questions for Brian? Please email him, support@keeptradingsimple.com. We are both very accessible, and we want to help any way we can. A quick recap. We're seeing dollar strength across the board. We saw gold make a pretty interesting volatile move all around the core PCE price index. And with that, really want to wish everyone a happy Memorial Day weekend, a safe Memorial Day weekend, and Brian and I will catch you on Tuesday morning. We will not be doing this on Monday due to the abbreviated session. And with that, I want to wish you all good luck in the markets. Thanks, everyone.